and Lens of America. So we got it.
And I'm going to have us go live.
Wow. So let's see. I get why. But curious as to maybe we can talk about that on the show.
Sure. Let's do it again. It's just a bunch of guys sitting around the bar having drinks, without the drinks, talking business. That's our typical pitch. Now, what I'm trying to do here is we're live streaming, but then I'm gonna keep this to go. We also record the show for the local television station. So this part of it's kind of new, doing it the live streaming, because it's captured on a file and then send it to them.
Okay.
So I mean, theoretically people are listening to it live, but I don't know how many. So right now I can see me and I can see Nam, but I can't see you. So if we can shift over.
What if I shift my
that'd be perfect. Yeah, because then perfect for you. And then go ahead and
where's the camera?
It's right here.
Okay.
And that's about the only place I can put it where it can get us all in. So if you want to go ahead.
As far as
that's perfect.
Live versus editing, do you edit it at all, or
no?
It's going up.
No, I mean, and it's rare that we ever have to redo this file here. You know, I mean, when we're doing the show, when I go plug, this live streaming is just live streaming. You know, so we're not going to edit that at all, because what happens is it takes about 40 minutes for us to do the show, but I have to do 56 minutes worth of TV in order for them. If I hand in a file that's 46 minutes, they're going to go, oh, too short. So I have to kind of fill off with doing a little dance and
Did you start recording already?
I am.
Okay.
We are live. So put on your smiles and don't swear. The FCC don't like that.
No swearing.
No swearing.
Okay.
All right. Yeah. And I can see you perfectly now because this is to the side here, and you are all set. Okay. And you got to deal with the week.
Yeah.
And we don't have any specific questions per se, but we talk about market trends and how CoStar is objective because they're like the MLS.
Right. Okay.
Okay. And if you guys are ready, and then we'll make sure that we give out your information, and we'll put our phones on silence if we could. Well, I had that I have to remind Bruce that when we do the sports show, he always forgets and he always gets calls from people.
Athletes?
Yeah, athletes or, KCBS. I have to go, Bruce, or his wife. I don't care if it's your wife. Okay. The show must go on. Okay, the times. 6:10, 8:28, 9:10, 9:17, and 5:10. I have my little thing here, and if you guys want to use your phone timer,
okay.
So that you know what basically what'll happen is when we cut to commercial break, you'll kind of see me do this. Keep talking, but then know that I'll have to cut you off because we'll cut to commercial break. They're pretty hard on the brakes. Okay, how's your mic doing?
Good. How do I sound?
You sound perfect. And Jesse, you're close enough to the. Let's see how you sound there. Scoot yourself in.
Angle in and get a little closer here.
Okay. All right. Then you can turn that if you need to. Okay. How's that? Okay.
All right.
All right.
How do I sound?
You sound
good.
Very good.
Great.
Okay. You're ready? We will go. Well, welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark. I have it written down as Mark. It's Nam Fon of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And now is actually probably the perfect time to get a tanning certificate because you don't want to get burnt from the sun right away. You want to get your pre-tan on. And the certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. I believe they were voted best in Marin and best in San Francisco.
Nice.
Not bad. Today's trivia theme is general trivia. Now we have a special guest today, Jesse Gundersheim of CoStar. And CoStar is the largest commercial real estate information provider. So we've had, a lot of, like Patty Cohen is our residential real estate person. And so now we have Jesse here to talk about what's going on in the commercial market. I'm going to give just a couple little tidbits here, and then I'll let you continue. So CoStar, for those not familiar with CoStar, owns LoopNet, which I'm sure almost everybody's familiar with LoopNet now. apartments.com and forrent.com. And they do the market trends for multifamily and office. The interesting thing is they are objective because they are just like the MLS for commercial, like MLS for residential. So, yep. Jesse, welcome to the Best of Investing.
Thanks so much for having me. Pleasure to be here.
Good. So what market trends, first of all, are you seeing? You know, everyone talks about residential real estate, how, you know, things are going through the roof, et cetera. What are you finding in the Bay Area? First of all, is your territory the Bay Area?
It is. Okay. From the North Bay, Napa, Sonoma, down south to Santa Clara County.
Oh, okay, good. All right, good here.
So overall, trend-wise, yeah, it's still a hot commercial real estate market overall, but slowing down a little bit. And we've got a lot of supply coming into the market that's really satisfying that pent-up demand.
Is it new construction or is it?
It's new construction, really? Yeah. Okay. It's really starting to balance things out there. So, for instance, in the office sector in San Francisco, we've actually seen rents flatline for about 2 years now, after 8 years of exponential growth, around 15% annually.
And was that a lot of the Silicon Valley people kind of moving into San Francisco because rents were too expensive in the Silicon Valley?
They've definitely moved up from Silicon Valley. I wouldn't say it's to escape rents there. It's more of tech companies wanting to establish at least a base in San Francisco, harness all of that incredible tech talent that lives in the city.
Yeah, I'm waiting for tech to move up to the North Bay to get some of the talent up here.
Well, they have Petaluma, I think, actually is got its own little tech.
A little bit of biotech up there in the North Bay, but for the most part, some limited high-tech tenants here in the North Bay.
We've been waiting for somebody to here in Marin, in Nevada specifically, to fill the old fireman's fund space, but nobody's knocked. Maybe people have knocked, but apparently the building's is old.
That's what I'm hearing. It's been sitting there vacant for a couple of years now, and I've heard it may be razzed at some point if no one takes it.
Oh, they raise it? Really? Wow. It's funny. You know, everyone kept saying, "Oh, Google's coming in," and it's like, well, no. But if they did, I mean, they'd probably have to put in, you know, 50 million or something to make it.
To bring it up.
Yeah. What is it? 1 million square feet? No, it's not that big, is it?
I'm not sure.
No. It can't be a million.
I would say about 3/4 of a million.
It is pretty big, though.
Certainly the largest chunk of vacant and available space here in Marin.
I wonder what they're asking. I mean, it's still for lease technically.
Yeah, I think so. I think there's still a sign up front.
It is for lease.
Maybe you could move a big family in.
Yeah,
turn it into residential.
Family.
Yeah.
Right. So CoStar they're nationwide, right?
That's
correct. If they're the MLS, sort of the MLS, because I know MLSs on the residential side are really fragmented. Each county, or in some cases, multiple counties, or have their own MLS. And there's one of the long-standing issues is there hasn't been like a real national MLS. So I was wondering on the commercial side if that's the case, or
through about 25 years in operation, CoStar has built itself up. We've invested a ton of money in human capital. We've got a research team of over about 30 individuals covering the San Francisco Bay Area market itself.
Okay.
There's about 2,300 full-time researchers that we employ at CoStar in America.
Wow.
We cover all commercial real estate markets in America. We also cover Canada as well, and have some operations in Spain and Germany.
Okay. Tell you what, we have to cut to a commercial break. Before we do, I do want to ask you a question. What is the most expensive area in the Bay Area that you're seeing? What rent?
I would go with rents probably in Soma area of San Francisco.
That's the most expensive, even more than like Los Altos or Palo Alto?
For commercial?
It all depends on where you're at within each of these areas. So
and how much is that roughly?
It could be over $100 per square foot in San Francisco. If you're talking the trophy high-rise space, upwards of $120 per square foot.
$120 for rent?
Yeah, downtown San
Francisco. That's for years, but that's $10 a foot. Holy smokes. Okay, I'm in the wrong business. All right. We're going to go to our first commercial break. If you know the answer, don't answer until we get back from commercial. What is the name of Simba's uncle in the movie The Lion King? That's our trivia question. You should know that, Nom. You have a little girl. 415-888-912-1190 to answer that question. If you're the first caller with the correct answer, you're going to win that tanning certificate. Don't touch that dial. The Best of Investing will be right back.
Okay. I have no clue.
Oh, come on.
Lion King yet.
You didn't watch Lion King?
No.
Really? It's a good one.
Jeff family.
It's the father, Simba's father.
It's
Simba's
Simba's uncle is what we want to know.
Scar.
That's right. Very good. See, now you can
That's
answer.
impressive.
I'm surprised you didn't know that, huh?
I haven't watched it yet.
You haven't watched it. It's actually very. I'd watch it again, even as an adult.
Really?
Christian,
Yeah.
like the Christian
Right,
Cry.
it's on my bucket list.
Yeah. Your little girl will like it. Chloe will like it.
She might have grown past out of it now.
Was she? How old is she?
10.
No. She'll
Really?
she'll
All
like it. Yeah. And if you have like surround sound or something, it's really good when all the wildebeest come running down the. In fact, when we first got it, Christian was about, I think it was 1995 when it came out. I think he was a little guy. We'd just gotten surround sound, and so we had this. We had the little movie playing. Friends would come over and go, "God, you gotta listen to the surround sound," and we do it where the wildebeest are coming down, and you can hear, and it's like it was really pretty cool.
Like you were
I gotta
there.
say, yeah. I had to keep wondering. I go, wildebeest, they're gonna get me. All right, the segments go pretty quick.
Yeah, definitely.
Okay. What do we want to cover? Do
Do you want to continue with some of the commercial still, or can we?
Oh yeah.
Yeah, I would love to ask questions about
Yeah, go
like
ahead.
LoopNet or.
Yeah. Oh yeah, because it's not pay to play per se, but it's not free anymore.
LoopNet isn't.
Yeah.
But, okay.
Okay. So I got to do a couple of announcements here. We'll do one at this break and one at the next one. Excuse me. Okay. So just remember, you have to be right up there. I know it's hard, especially it's like you want to do this because you want to talk, but you can't do it. Okay. Here we go. Welcome to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. First trivia question: what was the name of Simba's uncle in the movie The Lion King? And our guest Jesse Gundersheim knows the answer.
I think I've got it with Scar.
Scar. That is correct. Mufasa was the father. Remember? Mufasa.
No, I don't.
You don't remember that? Oh, yeah. So I'm trying to get Nam to go see the movie. Actually, you know what? The play is really cool.
Really?
It's the costumes.
But you guys are nodding your heads like, hey, who hasn't seen this?
Yeah, exactly.
Saw it in New York. Best play I've ever seen.
Oh,
Yeah,
really? That's
I saw it in San Francisco and it was really good. Almost as good as the Jersey voice. Okay, so I want to make a mention here for Gerstein plays Brahms. Remember Brahms, piano, with the San Francisco Symphony on May 25th. So pianist Carol Gerstein brings his extraordinary technique and musicianship. It's Brahms Piano Concerto No. 1. Of course, I don't know any of Brahms' work myself. I just know it's on the piano, on the ivory, tickle the ivories, right? It opens with a mighty force, settles into spiritual contemplation, and concludes with a jaunty finale. So that's May 25th and May 26th, 8 p.m. at Davie Symphony Hall. All right. We are in the studio here with Jesse Gundersheim, who is representing CoStar. Again, it owns LoopNet, apartments.com, and forrent.com. To talk about commercial real estate trends.
Yeah.
Nam, you had a couple questions?
Yeah, I mean, those are great, seem like great acquisitions for CoStar. Great assets, too. So LoopNet has been around for a long time, and that was really what I thought was the MLS at one point for commercial. Were they competitors of CoStar for a time, or?
They were at one point. CoStar, I bought them many years ago, I want to say in 2011 or so.
Yeah, about 10 years ago.
Yeah. And just recently, about 2 months ago, we've transitioned the platforms a little bit. So we've kind of finally cobbled the two platforms together. We've harnessed all the information that was in LoopNet and is continued to go in LoopNet, which will flow into the CoStar system.
Okay.
But we're transitioning LoopNet itself into more of a marketing platform, whereas CoStar will remain the premier information and data,
like a data platform
provider. Yeah.
Okay.
And LoopNet used to be free for both, I think, buyers and sellers, but sort of, right?
At least to list some things, and now
right.
sellers will certainly have to pay in order to market their own properties on there. It's just a broad reach. It's an external marketing platform that they can reach many individual buyers of property that aren't CoStar subscribers.
Right.
Okay.
So if I wanted to list a property, I would go to LoopNet versus CoStar per se, or can you do both still?
You'd probably want it on both. I mean,
Okay.
you definitely would want as much exposure as you can. That's why we offer you, another avenue to advertise it publicly on LoopNet, If you're more interested on catering specifically to the commercial real estate community and remaining that listing within brokers, developers, and owners, you can stick that on the CoStar system itself.
And where do you get your information besides, public information? I mean, do you guys just like call various places and say, hey, we understand you rented your place. What'd you rent it for?
That's absolutely true. Yeah, I mentioned the 30 or so professional researchers that we have in the call center, and they're out incentivized to speak with brokers once every 30 days, if not sooner.
Wow.
And certainly when a space becomes leased, they follow up with that broker immediately to see details on that transaction.
And I could see that being an incentive actually for the brokers too, because they want to have as much current information to be able to assist their client.
Right, because on the residential side, all of that's public records, right? So on the commercial side, I suppose it's not.
You're right. We're the de facto public record. We've just been able to build up the system.
Sales would be public record.
That's true.
But not renting.
Right.
Of course, renting wouldn't be on residential public record, right?
I don't, it depends.
Not really.
Not necessarily, unless you're going through like the MLS to put a property up for lease, like a single family residence. But it's just interesting how commercial versus residential works. Sounds sort of like what people on the residential side, they look at Zillow now for property valuations. Some also look at a company called Trulia, but maybe in the last few years, Zillow acquired Trulia. So it's sort of like, are you going to CoStar or LoopNet? Doesn't really matter. At the end of the day, you're sort of going to both.
Keep your enemies or your friends close and your enemies closer, right? So you go ahead and buy them out.
Yeah, acquire them.
And Trulia is still existing.
Yeah.
And so is Zillow. So I wonder, would they just share information, or are they going to combine it into one?
Probably at some point they might. Right now there's probably unique audiences on both where it makes sense to keep both. But at some point maybe they'll shift their models a little bit, and Zillow stays the where you go to see what your home's worth.
Antitrust. Can't do that. No.
No, but both are have their value. I go to both of them all the time just to compare. So there's some value there.
And there's definitely some spread. I mean, there's definitely differences between them than the values. I don't know how they get one versus the other. I mean, does that happen with you guys too, with valuations?
We're just exploring that avenue of actually valuing properties ourselves with estimated values based on the data points that we do have. So it's something that's emerging in commercial real estate.
But in either case, you really ultimately need to talk to a live person to get the real valuations, not a broker. I mean, there are good starting points, at least on the residential side.
Well, even on the commercial, you got to be, in the market. You can't just hire some person in Iowa to do. I mean, because things are just so. We're like a microclimate, I guess they call it, or micro economic area.
Right. Yeah. And it's it's dynamic. The market is shifting all the time, so you really have to. There's no data that's real time, other than maybe what's talking to brokers.
Actually,
out in the marketplace.
So at CoStar we do provide rents on a daily basis, believe it or not, and vacancy inventory stats on a daily basis.
Okay.
Wow.
Yep.
That's impressive.
It is, and it's a little bit of a differentiating factor from our competing firms out there. We can see what rents are doing on a seasonal basis, on a quarterly basis. So, for example, in the apartment market, rents do tend to head up in the springtime. The summertime, as people move, that's when the demand is. It tends to go down every third and fourth quarter towards the winter, fall times, not so much rent growth.
And then what would, if the audience is interested in this, would they just go to CoStar.com
or contact you?
Yeah.
They can go to CoStar.com to find out more information about the product, and they'll find avenues on the website as to how to contact us. And we happily go out to all interested clients and do a couple-hour demo one-on-one with them, showing them the product at their desk, and informing them of how they can harness all that data for their needs.
Okay, very good. And stay with us, because when we come back from break, we're going to interview Nam here, because he's got an interesting deal of the week. I call it. It's like a hee-haw. Deal of the week. Okay. Second trivia question. What in the movie Fight Club? You remember that?
Oh yeah.
What is the first rule in the movie Fight Club? If you remember, don't say anything. Okay. Call 888-912-1190 if you're the first caller with the correct answer. We're going to give you a free tanning certificate, which is worth over $100, because you can choose from amongst the various programs they have. They have the sun tanning, so to speak. So again, in the movie Fight Club, what is the first rule of Fight Club? 888-912-1190. Don't touch that dial. The best of investing is going to be right back. Okay. We'll see if Nam knows the answer to that when we come back.
I think I know.
You know?
So can I ask you some questions later about commercial up in the North Bay?
Sure.
Okay, great. Because that's part of our theme on the residential side too.
And there was
the impact from the fires and.
Oh yeah,
yeah.
I've got some good stats on that.
Sweet.
Just wrote an article about it.
Oh, you did? Okay.
Yes, Santa Rosa, leading market for year-over-year rent growth in all of California.
Wow.
Oh wow.
On the commercial side.
Apartment rents.
Apartment. Okay.
Which were up 7%.
Okay. Year over year.
Year over year.
Okay.
Yeah, we'll get into your stuff and then you can go back and we'll ask him.
Yeah. So what's your role at CoStar?
So title of market economist. So basically, I analyze the market.
Oh, awesome.
And write our reports and with clients, giving presentations about what's happening.
Very cool.
It's cool. And is that something that you post on?
It's available through the product.
Okay. Subscription based?
Yeah.
Okay. Cool. Just might be interesting to host on our site too sometimes.
There's various
commercial stuff.
Whatever they allow.
Yeah. Yeah. I mean, maybe we subscribe. We can chat about it afterwards. But
I mean, maybe they'll just give you a complimentary one because you can help push people that way. Hey, talk to them. Okay, make one announcement here after our here. Okay, just follow the lead, as they say. Ready? Here we go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Nam Phan. Our special guest, Jesse Gundersheim from CoStar. Thank you very much for joining us. Stay with us because we want to interact with us on the rest of the show. Second trivia question. What is the first rule in the movie Fight Club? Nam.
Don't talk about Fight Club?
Don't talk it. That's correct.
Right.
Don't talk about. Oh, okay. So he's got a young daughter. He doesn't see The Lion King. But he watches Fight Club. Okay, I just want to make sure I get it correct.
She knows those rules.
She knows those rules.
Do not talk about Fight
Yeah.
Club.
I bet she
In
does.
fourth grade.
In fourth grade, yeah, really. That's funny. Okay, I want to make a mention here. You know what? It's going to be summertime. The weather's getting really good. You want to do some whitewater rafting. It's the ultimate team sport. Motherlode River Center has been running river trips from mild to wild on the American River, California's most popular whitewater rafting destination. You guys ever done the?
Yeah.
It's a lot of fun. Get the Widowmaker and Chili Bar Run and all that fun stuff. So it's an ideal choice for birthday parties, family vacations, or an adventurous day out with the friends. Motherlode, get this, they're the only rafting outfitter with an on-site zip line and high ropes challenge course. Check them out, 530-626-4187, or visit them at malode.com. So Nam, tell us what's going on at Pacific Private Money. You got a deal of the week, and kind of give the audience kind of a brief rundown as to what Pacific Private Money does.
Yeah, so Pacific Private Money, we serve two clients. Number one are our borrower clients, those who come to us because they can't get conventional financing for one reason or another. It's not what private lending was 10 plus years ago, where it's the worst of the worst borrowers. It's people in transactional distress, as Mark likes to always say. So people come to us because they've run out of time with a regular bank, or there's just scenarios that come up where banks just can't help them. So we step in and we provide a loan to them, oftentimes the bridge loans, and then the other clients we serve are investors. So we have a fund, the Pacific Private Money Fund, where investors can invest. Those investors do need to be accredited, but we pay annualized returns of 7.5% to 8%. So deal of the week. So our deals are focused on the borrower side. So those who come to us to borrow funds. And this week we had a interesting scenario. So borrower had $600,000 down payment on an $825,000 property that they're purchasing in the Sacramento area. So gosh, I only need $225,000. That's super low loan to value.
Yeah.
Why wouldn't a bank loan the money? Well, they their debt ratio was above 50% I think 49% was the sort of the cutoff for this
Yeah.
particular bank. They were at 51, so they're just squeaking by.
So they had a
They're
lot of
swinging over.
cash to put down, but their income compared to their debt wasn't.
Right.
It was too high. Gotcha.
And they also had a home that they were going to be selling here in Novato. So that would have had, had they sold it before purchasing, they would have had plenty of cash. Now, we did a bridge loan. We didn't need to cross because, 51% for us in terms of debt to income, that's in the equity position that they had and all of the other
$200,000 on an $800,000 house. You almost go to bed at night hoping they're going to fail.
So we didn't have to cross
Gotcha.
the property, and we provided the loan. They completed the purchase.
I'm sorry. Let me back up for a minute, just to give the audience a little education here, as they say. When Nam mentions about crossing, that usually what that means is you're getting a loan on both properties versus just the one.
Yeah, we didn't have to use any equity from the home that they currently own. And they didn't own it free and clear, but they had a lot of equity in it. Okay. So we could have crossed it had we needed to.
Well, you would have been at about 10% loan to value or less.
Right.
Yeah.
The other thing, too, is they're buying a home that was the model home for development. Fully furnished.
That's usually the nicest one.
So they got it under market, fully furnished.
Wow.
With all of the furniture that they were using for display as this is the model home.
How long do you think they're going to hold your loan? Because they're
going to pay us off completely. So their houses that they own, their first home, the one they're moving out of, it's on the market now. Okay. So they may pay us off in 60 days. Okay. They're in a bridge loan, which there's no prepay penalty on its interest only. So they're going to pay us off pretty quickly. I think they're really happy with the.
But the interest rate is somewhere over 8%?
Yes. Oh, yeah. The interest rate's somewhere in the 9s. What's the opportunity cost? To complete this purchase on a home that I would say at 825 was probably below market.
Well, from their standpoint, they only borrowed a couple $100,000, and whether they pay 9% or 6%, it's only on a couple $100,000, and it's not going to be for a long time.
Yeah, interest only on 60 days.
But you're able to come to the rescue to get them the house because a bank couldn't do it, and I mean it's really a win-win situation. So for the audience out there, that's a pretty conservative loan to invest in. Mm-hmm. And so how do they invest in the fund?
So to invest in the fund, they should call me up.
There you go.
415-883-2150, or go to www.pacificprivatemoney.com. You can attend our events. Our next one is Thursday, May 31st, actually in Novato. Okay. It's from 6 to 8 p.m. That's a Thursday.
And that's actually at your office?
Yes, at our office at 1555 Grant Avenue. We're going to have another one, and the next one will be June sometime, and probably in the East Bay. Okay. And a lot of people saying, hey, when are you coming to the East Bay next?
Yeah, it's kind of hard for people to come to Novato at 6 p.m. at night, fighting all that traffic.
We have people in Santa Fe who refuse to come to Novato. It's really sad. No excuse for you Santa Fe listeners. Please.
It's one thing if you have to cross a bridge, but there's no bridge there yet.
To cross city lines, it's tough. It's not the Old West.
I guess you could just go in a station wagon, go door to door, giving a pitch.
We'll try that. Might be a little expensive.
Yeah, a little time consuming too.
So a couple of other, not necessarily deals of the week, but maybe trends. So we have, the construction loans are starting to flow in from the North Bay, from the fires, people rebuilding. The people that are coming to us are builders, developers who are acquiring some of these properties. And
so these would be people who lost their home but just said, I don't want to rebuild. They want to just get out.
Yeah. So the borrowers are the ones who acquired some of the lots from the folks who just decided not to they moved away, probably, and decided to just, sell their lot.
Now, have you gotten any requests from people who decided they want to stay and actually rebuild their home?
Haven't seen that. I'll talk to our, Matt, our outside agent. And Matt will be on the show in June to talk about what's going on in the marketplace. But he's the one who said, hey, I'm starting to see developers come to us, some, on one property, one parcel, and others who acquired multiple parcels for development. So we're starting to see that come up, and I think we're going to get busy in that area really soon. We're busy enough. We're busy as it is. Mm-hmm. But I think we're going to see a significant pickup in construction.
Yeah, I could see that there'd be some cases where people who want to rebuild their home still can't qualify for the bank because personally maybe they had bankruptcy, or they just have bad credit,
Mhm.
or low credit,
Right.
or they were underinsured, and then so those poor people, they got a nice big fat settlement from the insurance company, but it's not enough to build a house.
Right.
And so from Pacific Private Money standpoint, that could be a pretty conservative loan.
Yeah.
Because the loan to
absolutely.
values can be there. Tell you what, we're going to cut to a commercial break. When we come back, I know you got a couple more questions here for Jesse. Third trivia question. What automotive company produced the car named the RX-7? And I remember this because a friend of mine had it when it first came out. I said, Dad, it's just like, that's the coolest car ever.
Rotary engine, too.
Don't give the hints
There's
out.
That's not the brand.
I know, but that's still. You disappoint me.
Oh.
Sometimes you just disappoint me. No,
I won't be back after this segment. If you're watching the live stream, I'll be doing the walk of shame up the door right now.
Sometimes I call him Evil Mom because he puts he sends me pictures of donuts because he knows I'm a donut fiend. All right, don't touch that dial. Call 888-912-1190 to answer that question. Bye-bye. We'll be right back. Bye-bye. Bye-bye. All right.
How is rotary engine any more revealing than RX-7?
Because who's the only one that does a rotary engine?
That was lost on me, but
Maybe I'm just giving you.
I know.
It makes for good radio.
Yeah.
That's all I care about.
People are going to stick around and see if there was a fight. Hey, after it comes back and say, Nom's not back.
Well, what's really funny was I had this. My brother actually came up with this one. What we did, I've done this now twice over. It's 8 years now. I've only done it twice on the show because he can't repeat the same thing too often, or else people go, "I've heard that one before." At the end, I'll have like thoughts for the day, and so my thought for the day was when Mark was here. It was, "Hey Mark, smell this cloth. Does this smell like chloroform to you?" And he'd go, right, and then suddenly, Mark. Tune in next week to the best of investing. Mark will be awake by then. We get some laughs out of that one.
That's great. That's funny.
Isn't that funny?
Yeah.
All right, you ready? Here we go. Welcome back to the best of investing. Edward Brown here. Nom, he took the walk of shame. No, he's back in the studio. He's back. All right, here's our third trivia question. What automotive company produced a car named the RX-7?
I have no idea.
Oh, get out of here.
Mazda.
with the rotary engines.
How many people out there knew that rotary engine was Mazda?
Well, we'll find out when we get all these phone calls. Okay, so Nom, you want to ask Jesse a question?
Yeah, we were just talking about the fires and how on the residential side you're starting to see development happening. Are you seeing any on the commercial side, or how's commercial versus rents?
Not a lot of development happening so far, and very few apartment communities were actually destroyed in the fires itself. Okay. It was pretty limited damage, mainly destroyed single-family homes out there. But it certainly has had an effect on the apartment market out there. Santa Rosa is, in fact, the strongest market throughout California for year-over-year rent growth at around 7% over the past year. Vacancy is also low. It's down around 3%. So
I got to make a comment here that I don't like rent control. I don't think it works. There's lots of reasons why it's not good for really anybody. However, I do appreciate where the government comes in and says, when you have a disaster situation like fires, you can only raise no more than 10%. And I think that's fair because nobody should be gouged. It's sort of like when they have a water crisis and suddenly you're selling ice for $50 a bag. I mean, that's just not right. But it's interesting where a lot of people with the rent control, they just assume, oh yeah, it's a good thing. And the first thing I thought of was, okay, then you know what? If they're going to put let's say I own apartments and they can put rent control, then I'm going to go to PG&E and I'm going to say, oh, by the way, PG&E, you're not allowed to raise the utilities, right? And insurance, you're not allowed to do it either. And the gardener, you can't do it either. I mean, you're just focusing on that one aspect.
Right.
And what ends up happening, a lot of people don't realize is if I'm the landlord and suddenly my rents are stagnant, but my costs are going through the roof, guess what? I'm not going to be able to afford to fix the heaters,
Right.
the air conditioning. It's going to be a slum landlord.
Yeah, and we were just at a realtor event
Yeah.
earlier this week where rent control can actually stifle future projects because for a
Exactly.
developer they're going to say, you know what, if there's rent control, that automatically caps how much I can make. And
Yeah,
who's
who's
going to be
build?
incentivized to
That's
build if there's less profit in it? I mean, that's just
Yeah.
the
And so-
way things
And then
work.
you limit your supply, and
Right.
then it's suddenly all these people, there's not enough housing.
Yes.
Well, then guess what? Make it so that make the permit process easier and less expensive. There was a time when I think it was Petaluma when the market was severely getting hit in 2008, 9, 10, right? And Petaluma said, now prices they're dropping down to where a house costs $200,000 as an example, and they were charging like $70,000 for a permit. And I'm going, okay, wait a minute. A house costs $70,000. A permit $70,000 on a $200,000 house. That doesn't make any sense. And they were going, we're not getting enough people to take out permits. So I guess we're gonna have to raise the price. And it's like counterintuitive. It just reminds me. It's like when remember there was a time when General Motors filed bankruptcy, right?
Mhm.
I could have solved all their problems. Just sell one car, sell it for $2 trillion. But all you have to do is sell one car. I
Right.
think it gets a little ridiculous on that.
Yeah, I mean, rent control doesn't seem like it's solving the affordability issue. There's got to be other ways to do it, but rent control, I mean, that
Keep the government
stifles development and construction.
Correct.
Absolutely.
Hey, you know what? We do have an email question that came in. And then this one was from Mark, but I'm sure you can handle this one. It says, I've invested in a fund similar to the Pacific Private Money Fund, but that company lowered their distribution down by over 0.5%. Are you, meaning Pacific Private Money's fund, planning on lowering the distribution?
No.
Okay.
I don't know why they may have lowered their distribution. I mean, the probably simplest one is maybe their returns or just aren't where they were previously.
Yeah.
But we're still maintaining a strong, steady, constant,
The deal
7.5 to 8%. It's largely driven by the deal flow and what we're able to charge for the loans that we do. There is pressure in California in general, just because it's such an attractive market for people to invest in real estate. But if that fund was in California and they're lowering, they may have some of the types of loans they're doing, there might be more competition for. One thing that comes to mind is maybe the fix and flip loans. Maybe they do a lot of those. Those are typically easier to do, so more investors chase those, and that drives down rates.
Okay.
So,
or I wonder if it's maybe they're sitting with too much cash. They got paid off on other loans, and they just can't place it.
Right.
The deal flow is just not there.
So it could be that they have a lot of liquidity. And real quick, when I say it's easier to do fix and flip, there's less disclosure requirements. They're non-owner.
From the lender.
From the lenders. So that's why it's
that's one of the good deal flows you guys have is you're one of the few lenders who's licensed to do. You're not the only one, but you're one of the few in California who are licensed to do to provide loans to owner-occupied personal residences.
Yeah, consumer owner-occupied residential real estate lending there's much more rigorous compliance that you have to do in terms of disclosures and buyer protections, which is good for the buyer.
Yeah.
But a lot of private lenders don't want to take that on just because there's more work, a little more complex.
Well, it costs more to have more manpower do it, continuing education, software, legal, yada, yada, yada.
Yeah, we've got a great team with a lot of experience in not only private lending, but conventional lending, which is, all the loans we do, we always look for the exit. If it's not paying us off completely, maybe it's refinancing out of our loans. And so we're always consulting with our referral sources, which are the lenders. Say conventional lenders, can this person refinance out of our loan and when? And that's a really important data point for us before we'll green light, a loan for our fund or for our trustee investors.
Okay.
So,
Jesse, before we cut to a break, we got a couple more minutes. Is there anything you wanted to add?
As far as the apartment market goes, there's a big elephant in the room, and that's the potential repeal of Acosta-Hawkins, which looks like they've gained enough signatures now to add it to the November ballot. There's certainly a lot of concern amongst building owners.
Would
about
that be
this repeal.
California?
It's California wide.
So then what happened? Can a city like San Francisco say, forget that, we're going to have our own?
Yes. If it were repealed, it would allow each city to then establish its own rent control to a stronger degree than they are allowed to now. For example, it's not permitted on single-family homes or any apartments built before 82, 78 in San Francisco, a little bit earlier in some local jurisdictions. But if that were repealed, then cities could go ahead and do whatever they wanted with rent control effectively.
So the fear is that the cities will impose even greater rent control.
That's right.
That does not seem like it should. Well, I just don't understand the space very well. But in terms of that just seems like that'll stifle even more so.
Yeah, going back to the rent control, conversation. I think there's only one real winners out of that. That's the existing people who are renting and who get to keep their rental rates at extremely low rates with low.
And I wonder how many people sublet without telling the landlord. I know that happens. And I had a client who lived in her apartment in San Francisco for, I don't know, 30-something years. And, with the small increases she had, she was paying, maybe $300 a month for an apartment that was at least $3,000 a month. But again, I'm sure the landlord's expenses went much higher than that. So, yeah, it was good for her, but all in all, not really good for the rest of anyone else.
Yeah, and if you think of the other renters who are trying to get into that building now, without a doubt, that landlord's trying to recoup maybe some of that lost money on the newest renters.
That's a good point. All right, don't touch that dial. The Best of Investing will be right back with some closing comments.
Okay. So when is that going up for?
On the November ballot.
So maybe I got lost. If I'm a voter, what am I voting on?
You're voting. It's called some Affordability Act or whatever, but it would repeal an existing law that caps rent control.
In other words,
so it's the devil for the landlords. It's the devil it's better than.
Well, at least cities are capped in what they do,
right?
To what's in Costa-Hawkins.
So I want to vote.
But if this is repealed, then cities can go out and say, okay, single-family homes are capped. Condos are capped.
So in other words, I want to vote no on that.
From a landlord perspective, sure, yeah.
Well, I think even from a human perspective.
I think it's going to be very close.
You get the average person who doesn't understand, or just renters. They just are very focused on what's good for me.
And here's another thing too is I wanted to bring this up, but I wasn't sure how this is going to be passed or if this is up for a vote. But California is going to require all new homes to be built with solar.
Yeah.
Right? Is that a November ballot item, or is that just
I think that's passed.
Okay.
Which
what? Be cool.
Yeah, I think it's kind of. What's the downside?
Worth talking about. I mean, not for a future show. I think we should just mention it. Hey,
let's mention it now. Yeah. So. Okay. Here we go. Ready? Go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, with Nam Phan. He's back in the studio. He walked the walk of shame two segments ago, and he's back and forth again from Pacific Private Money, and our special guest, Jesse Gundersheim from CoStar. Nam, you wanted to mention something that just recently got passed.
Yeah, the state passed legislation requiring all new homes be built with solar. So I don't know when that takes effect. Is it 2020 or is it?
I don't remember when it gets.
We'll cover it in more detail in a follow-up show, but I think that's really interesting.
Yeah, it's really good for the solar industry. I don't know which one company would do it, but it's interesting. I get on a personal note. I got a solar system from a company that is no longer in business. However, I did what they call the lease program rather than the ownership program. So the company that owns the inverter, because again, I'm just the tenant, so to speak, I'm leasing it. They guarantee a specific amount of power that it would produce. Okay, so even though the company who installed it, who I leased the system from, theoretically, they're out of business. I kind of don't care because I'm dealing with the company that is controlling the inverter and all that, and guaranteeing the production. So I actually noticed that my system was out, and I told them right away, but it's taken them a long time because that one company that went out of business, they're getting a lot of calls from people, right?
Mhm.
So, I'm 20th on the list or something. And in theory, I don't really care whether they ever fix the system because they guarantee a certain amount of production,
Mhm.
right? And as it turns out, for the reason it went on the fritz was one of the panels just cracked. Don't even know why. It's not like anything fell on it,
Huh.
So they finally looked at it, but they still haven't fixed it yet.
So your solar system doesn't work, but you're getting power just from the public
No.
utilities, or-
It's working, but not now. Now that the guy kind of tweaked it a little bit,
Mhm.
I'm missing one panel
Okay.
out of like 35 panels or something.
Right.
So it's just not producing as much.
Okay.
But they have to guarantee a certain amount. And so the thing I like about the leasing is after 20 years, I can decide to buy it,
Mhm.
or say take it off my roof, or lease it some more.
Right.
So it's kind of, I like it that way because, and I'm sure glad that I didn't just buy it without, if I bought it and the company went out of business, now what am I going to do?
Right.
Right. So at least this company, now, of course, the leasing company that I'm leasing the power basically from, if they go out of business, in theory, I'm going to stop paying on my lease.
Right.
Say, listen, you guys can't just collect the monthly and not produce the power. That ain't right. That just ain't right. All right, we got a couple of minutes. In about a minute, I'm going to do my thoughts of the day, which I think you guys are going to like. Any last? Go ahead and give out not only the website, but when the next.
Yeah. So the next fund
seminar.
information session is Thursday, May 31st, at our office in downtown Novato. Address is 1555 Grant Avenue, and to reserve a spot, give us a call. 415-883-2150. Or on the flip side, if you're listening and you're in the mortgage industry, or you're in a real estate broker, owner, or agent, and you want to learn more about, or educate your clients or your office about the lending side of it, what private money can do, give us a call as well. Same numbers, 415-883-2150. We hit the road all the time to do presentations to the mortgage industry. It's always really good, informative information for our mortgage convention.
Yes, people in the audience, they constantly shake their heads. Yes, yeah, I understand. Yep, that's my scenario. Got to help my client that way. Jesse Gundersheim from CoStar, thank you again for being in the studio with us and giving us market trends. People can go to CoStar.com for more information about your company. Here's our thoughts of the day. Fear, uncertainty, and discomfort are your compasses toward growth. And you learn more from your failure than from your success. But don't let that stop you. Failure builds character. Isn't that right?
Yes.
Okay. Just want to make sure you agreed with me on that. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. All right, so we have the show here is done. 48 minutes. We have 8 more minutes to record on here before I can cut this thing off. So, we'll do a little song and dance for us on the
Yeah,
show
sure.
here?
So for a follow-up, we got it'd be interesting to get people's opinion. Maybe Solaris, bring in somebody from Solar as well.
Mm-hmm.
What are the different options for people, or
yeah, it's going to be quite a boom for them. I mean, it's generally pretty good anyway. Because the way I looked at it, like it's what I'm paying PG&E plus what I'm paying them is less than what the total PG&E was. So it's it's really kind of a no-lose situation.
Right. I mean, it's going to add. People are saying it's going to add, whatever on average, 10 to 12,000 to the purchase price of a property.
But you're going to save on your PG&E.
Right. But I think as long as people understand that you're going to save.
Well, yeah, and here's the interesting thing too is that I got locked in at I think 11 cents a kilowatt plus a 2% increase per year. So I couldn't lock in just a specific price.
That's what they're paying you for the.
No. That's how much I have to. That's basically how much I have to. My PG&E rates got down to 11 cents per kilowatt, which is pretty good. Especially if PG&E rates go up. I'm kind of locked into a good a good rate from that
So
standpoint.
what's going to happen to a company like PG&E? I mean, how are they going to their model change?
They'll just go to the PUC and ask for more money. That's what's so funny about all this. Let's sue PG&E for the fires, and they go, sure, go ahead.
Okay.
PUC, we just lost $2 billion because people sued us on the fires. We need to increase rates. Okay. I mean, it's yes, they should be held accountable, if they did cause the fires, but it's kind of.
But I mean, as more and more people shift to solar.
Yeah, that's a
Flex
good
their
question.
models as much as they can. I know,
Yeah.
in Nevada, they were sold the solar panels thinking they would be able to sell it back to the grid at a certain price.
Yeah.
Right? But then they dropped that price substantially to like 1/5 of what they said it was going to be originally, and people had purchased these panels, and now they're like, I could never get my investment back on this at the rates you're buying it back for me.
Huh.
So there is
Some little hanky going on that.
moving parts.
That's-
Yeah, that's not very good. So, do you know what the CoStar charges for the licensing?
It's very varied.
Yeah.
There's various degrees of subscriptions.
Yeah.
I'm not.
Yeah, no, I know. You're more the information gatherer,
Yeah.
it's the salesperson on that.
Yeah, like I would ballpark it month to month. I think it's around $100 a month to start at, something like that.
It's not that much, really.
I mean, if you think about
That's
like
pretty
it can land you one deal,
Right.
like a year, it easily pays for itself.
Yeah.
That's kind of how we sell it,
That's interesting. I mean, that might be interesting to can you host it, that information as this on a,
No, not really.
because then, there has to be a pay, some sort of gateway or whatever.
Yeah.
I mean, we couldn't, but we can't resell it.
No, definitely.
Against.
Stop doing that. No more. No, can't do it. Can't do that.
Extremely litigation firm, actually. It's not afraid to go
Yeah.
after anyone and everyone.
Yeah.
Well,
Well,
that's,
never
I
mind.
kind of did hear that about like some of the some agents who were, like they go, why pay for 5 licenses? Let's just pay for one, whatever. And CoStar was not very happy with that.
Yeah.
That's going to be
That's
actually
like
what we're
taking
going
the
after
last
now. We've kind of taken it easy on those guys so far.
Well, that's tough because they are your clients, and so soon you're going after your own clients is a little.
So your data sources are pulled a lot. Sounds like some of it's just a lot of it's manually gathered. That's the hard work, but also your edge. But where else do you?
Yeah, a lot of different methods. So
Yeah.
we do have those actual physical people. We've got web scraping technology that scrapes public websites.
Yeah.
On the apartment side, it's mainly through apartments.com.
Yeah.
So it's the leading listing site for all the major apartment communities will list on there, and that's fed into CoStar, as well as forrent.com and Westside Rentals. We also have about 500 secret shoppers, what we call in Atlanta, who pretend to be actual apartment renters, so we can get like actual concession data.
Yeah.
So yeah, it's people, it's technology,
Wow.
it's a system to go over the publicly filed sales when those happen. We come through SEC filings for lease details.
Mm-hmm.
Yeah, it's a simple
Wow,
system.
that's much more fragmented than the residential side. I mean, in terms of like with the MLSs, it's very hard to list or sell without really, by owner. So, the MLSs have it's been it's tradition at this point to go through the MLS, and then there's all the public records too with title and escrow and the chain of title. So all of that's pretty easily accessible. So
yeah, I mean, you don't of course you could sell a building without putting it on our platform, but when you're talking about these sums of money, it would be almost a disservice to the actual owner to not put it on the most
to get that
publicly
exposure.
viewed
Right.
listing site.
Do you know how many buyers, where they typically come from, like geographically, around a building that's for sale?
We do have some insight into that. For example, San Francisco office market had about 15% foreign buyers as far as volume goes.
Okay.
Which is actually the 4th leading market for foreign investment in the country.
In the country.
As far as office markets go.
Is it Chinese?
A lot of it Chinese,
Yeah.
Hong Kong,
Okay.
some Middle East, some German. Yeah, for the most part, it's China.
Would New York be up there with
Yeah.
foreign buyers?
They're like more than double.
Okay.
Yeah.
And then Where else?
Washington, D.C.,
Washington.
and I want to say L.A.
LA. Okay. I was just thinking because on the residential side, a lot of foreign buyers were from China in the Bay Area and the Northwest. And then also in like Vancouver, Canada, a lot of money was pouring in from China
Yeah,
to buy West Coast real estate.
Yeah.
And LA too.
And how much is it being cut back now?
Yeah, good question. I'm not sure, but I know, for instance, in Canada, in Vancouver, there were you could tell who the foreign buyers were by whose lots had brown grass, because they were
They
just
weren't even
parking
there.
their money in Canadian real estate, but there was no maintenance. They were unoccupied properties.
Oh.
So Canada imposed, or China imposed, a lot of restrictions, and I don't think they seized properties, but they curbed a lot of the ability for Chinese citizens to be able to
Mhm.
invest out of country.
Oh yeah. Even
So-
on a trip here, they're limited to like ATM withdrawals of like, it was
Oh,
something
yeah.
that they could easily go over like a few thousand, maybe 5,000, but it was something like you take your whole family on a
Yeah.
kind of trip to America,
Yeah.
you might need that much money.
Right.
Sure.
And
That's
yeah, I know it's becoming definitely more challenging to get that money out of there and to invest in commercial real estate.
Do you track like EB5 investments and things like that, or
No, not,
less so?
I haven't cut those out.
Okay.
Yeah.
That's interesting. Wow, the commercial space, yeah, that's a whole other animal.
You guys all set? We're going to say goodbye to the camera.
You don't need us anymore? I was trying to fill the time. Now it's like you're dead to
Nope,
you
you're
guys
dead
are
to me.
me.